What's up, guys? Welcome back to another video. Today I'm going to be showing you guys how to keep your winners big and how to keep your losers small. This is a problem that I see a lot amongst a lot of traders, because maybe you've had experiences where, let's say you go on a win streak, right? 2, 3 weeks, 4 weeks, 5 weeks, 6 weeks, and then you go on another stretch of maybe 1, 2, 3, 4 bad days, and you've lost all the money you made during that really good streak. Right? I've had this happen to me plenty of times, and I know, a lot of you probably had that same experience, and you're like, well, what the heck? I'm making all this money just to lose it, right? So what should I do here? And for me, I don't want the answer to be, oh, well, maybe I should stop trading after I win, because that gives you, I mean, if you want to make money consistently in the market, you have to trade. So I don't think the answer is necessarily not to trade. I think the answer is adjusting what you're doing in the market that is causing you to have these massive losing days, or really causing you just to give that money back. Another situation that you may find yourself in is that you have really big winners, but you also have really big losers. So maybe you don't go on a streak, but you'll have you'll have a really good trade, and then the next trade will be really a bad trade that results in a bad loss. But what if I told you not every time you lose has to be a gigantic loss, right? The losses I have now are very small, right? In comparison to the winners that I have, right? If I make 5,000, I may lose, 500, right? I'm not losing 5,000 or making 5,000 and losing 4,500, right? That's a major difference. And then over the course of, a series of trades, if I keep making 5,000 per trade, and if I lose, let's say I win 5 trades and I lose 5 trades. If I made 5,000 on each of those trades and I lose 5,000 on each of those losses, right, those wins and losses, then that's a very big difference, and my P&L is very green. But, you don't want to win 5,000 and then lose 4,000. That's not very, it's not sustainable in the long run if what your plan is to scale this skill and actually make this a long-term thing for you. So let me show you how I manage my trades and how I keep my winners big and my losers small on a consistent basis, right? So let's do it. So right now we're on TradingView. This is a great platform to explain things. I usually use Thinkorswim when I actively trade, but their rewind feature is absolutely amazing. So let's go ahead and go through it. I'm actually going to take you through some trades that were really nice last Friday, so April 14th, that I think will be really good trades to explain exactly what I'm going to talk to you guys about today. And just off the bat, what we're doing today, I'm going to show you how I scale in and scale out of trades, because that's how I keep my losses small at all times, right? So let's go into this chart really quick. So I have 4 levels, right? 13,108. 13,131, 13,167, 13,215. Now this is NQ. If you don't know what this is, I trade futures. So NQ is the NASDAQ. If you trade options, that's QQQ, right? So if you look at the charts, it'll be very similar. So as you can see here, we've been on a downtrend, right? Going into pre-market, right? Which is 9 a.m. Eastern time. Now let's actually go to the 3-minute chart, and you can see that this trend is a lot more clear. Right. One thing you also notice is that we are holding up at this level. Now, one of my favorite setups, I love bottom reversals. Right. There's a couple bottom reversal setups that I gravitate towards. But in this example, this was just a clear example of we're at support. We've been on the downtrend, and the buyers on the 3-minute are just holding this level. Right, the buyers are holding this level, and I'm like, okay, I like this. Now, what most people do, they see a great entry, or they see a scenario playing out, and what they do is they go in full position. So whatever your full position is, let's say it's 5 contracts, 10 contracts, whatever it is. So let's say you get in 5 contracts right here. What you're doing is you're leaving yourself open for just one candle that goes wrong. And then next thing you know, let's say we just, we get in buys here, and then we dump under this level. Now you're down, and you're down big because you had a full position. But what I do, I like to scale in. So for me, if I were to see a situation like this, I love how we're holding here. What I'm going to do, let's say I want to buy 2 contracts. Usually by the end of by the time I'm done scaling in, I will usually have gotten in 10 contracts by that point. So let's go ahead and start. Let's start with 2 or 3 contracts. I'm going to start with 2, right? So I've already got a buy position here. Now, when we're talking about how you should scale in, that depends on, one, your risk management, how much you're willing to risk, and that's also dependent upon your account size. So if I'm trading 10 contracts, right, you can't say, oh, that's bad risk management, that's a lot, that's too much money. Well, what do you mean that's too much money? No, it's too much money for you, right? For me or for somebody else, 10 contracts is just fine. So if you're looking at this saying, yo, why would I ever size 10 contracts? You're just not at that level yet, which is okay. There was a point in time where a full size was 2 contracts for me. Right now, full size 10 to 15. I'm completely fine with that because I'm confident in my setups and I'm confident in my risk management ability. Right, and when I say 15 contracts, like I said, I'm not in 15 at one time on one entry. It's over the course of me scaling in that I get to that 15 or I get to that 10. Right, so let's go ahead and play this. We have 2 contracts here. Why? Because we're holding this level, and we look really strong here. We do have a resistance level right here, but we will see what happens. I love how the buyers are holding this. So let's go ahead and play this and see what happens. Right, okay, cool. So check this out. As you can see here, we started inching up. Now, I can't perfectly scale in using this example, using the rewind feature because the candles are really sporadic. Then obviously they're not going to be as smooth as they are during the actual day. But for me, I'm like, okay, as we make our move up, I'm going to average up, right? I'm going to add to my position, right? Because for me, if let's say I have a price target, reasonable price target, I would probably I'll probably have my first price target be here. And then obviously we have the trend line that I want to make sure of that we clear. And then I have my final PT would be 13,167. So if we go here, really, you can see that I'm risking, right, my stop loss. I entered, where did I enter? I entered, was it here? Based on this example, I know it was this candle, right? It's not going to be perfect. Right? This is excellent risk management, right? Why is it excellent risk management? Not only am I scaling in, but look at the risk to reward. I'm risking that little red for that much green. That's the crazy risk to reward right here for NQ, right? So how do I scale into this play? So for me personally, there's 2 different things you could do here. You could either get a small position here, like I did, and then add as we go up into this level. Or if you want to play it safe, which I think it would have been appropriate in this situation, let's clear this level first. Let's get above this level, right? This 13,131.50 level. And then we can ride it up to this next level because that's the risk is a lot better. Because one thing I don't want to do, I don't want to get 2 contracts here and then be at 8 contracts by the time I get here for it to reject, because now I have a lot of contracts at a higher level or at a more expensive price than I did way down here. So I want to make sure I manage my risk correctly. So let's just say I'm going to add to my position if we can break this level, because there's a high chance we make our move up. And then what I'll do is I'll move my stop loss a little higher. So then I'm not going to go red now. Now I'm not going to go red. Now this is considered what some people will say a free trade, because it's impossible for me to go red. If I move my stop loss up, I'm good to go, right? So hopefully it doesn't shoot out a sporadic candle, because I do want to add to my position. Let's see. Actually, I'm going to go ahead and play it really quick. Right? So we make it move down. We're kind of holding this level. Boom. Right? So we break that level. Let me go ahead and add some more contracts here. Right? And just for the sake of, the candles being sporadic, let's say I move up to 6 contracts. Right? I'm up 470 on the play. I'm averaging up, right? And I'm averaging up now. Now I want to see us hit right here, right? Remember, I'm green, right? As long as we hold this level here, my stop loss will be if we break below this level. So if I were to adjust this, let's see. Now this is what we look like. Right now, this is still excellent risk to reward, right? So let's go ahead and play this. right? We wick down, like we're wicking. Now, guys, you may be like, Isaac, well, would you have gotten out right here? Those who know how I trade, you always know I do not get out of a trade just because we're testing my stop loss, right? I want to, for in this situation, my stop loss is what I say, under this level. Did we break under the level? No, we didn't. What we did was we wicked under the level. The buyers or the sellers tried it, but the buyers said, no, we're holding this level. There's absolutely no reason for me to get out, right? There's no reason for me to get out this trade. So for you thinking, well, Isaac, you would have gotten out in real life, absolutely not. We're holding that level. We did not close under the level. There's no reason for me to get out. Also, Isaac, why do you feel better? Let me answer that question I already know you have. Well, one of the reasons I also wouldn't have gotten out is because I'm already green. I scaled into the trade. So I have excellent risk management on this trade. If we do wick down below, I'm still in the green. So if anything, I can be more lenient with that stop loss. It doesn't have to be, oh my gosh, I'm down so much, let me get out of the trade. It's okay, I'm giving back, I gave back a little bit of profit to see if we can, because I'm staying true to the stop loss, I want to see if we continue to break out. So let's go ahead, play this. And then you can see, obviously, we had a massive move up. Now, I'm not saying I would have held on this candle, or actually, I probably would have, honestly. Like I said in the beginning of the video, unfortunately, I did not catch this play because I just didn't see it when it was appropriate for a good entry, and I will never chase. If I miss it, I miss it. You'll get to the point where, and I hope everybody gets to this point, you'll get to the point where it sucks when you miss a move, but you are confident enough in your trading ability to know that if you don't catch it today, you'll catch it tomorrow, and then you'll catch it the next day, and then you'll catch it the next day. The last thing you want to do is give into your greed and then chase a play, potentially lose big on the play because you couldn't control you didn't have any self-discipline, right? So for me, I saw the move. I had to just let it go. It's all good. But you can see the P&L is wicked. Even with 6 contracts, I didn't even get in a full position. But you can see here how I scaled into the play. I did not just get in a, because of the risk factor, because a lot of times what will happen is you will get in a play. So let's say here, let's zoom in a little bit. Let's say you got in on this candle, right? This candle right here. And let me go ahead and create an arrow so you can see exactly what I'm talking about. You got in on that candle, right? Now, if this candle were to wick way down here while you were in that play with a full position, I guarantee you would have missed this run up because you would have been down enough money for you to say, oh my gosh, I'm down so much money right now because of this wick, right? No, the reason why you're down a bunch of money is because you didn't scale in. You got in a full position, right? So you can handle the wicks. You can't, like a lot of times I get questions all the time like, Isaac, what do I do? I was in the play, it hit my stop loss, or it started retracing, and then it took off where I thought it was going to go. Well, dude, your position sizing was way too heavy because I guarantee you if you were in a smaller position, you would have been able to hold that because the mental strain on the amount of money you would have been down would have been a lot lighter versus you being in a full position then watching the retest. Like that's a hard test. That's a hard retest. Even for me, I'm not saying I'm immune to that, which is why I scale into plays because my mental is a lot sharper and I don't have to worry about being down a bunch of money anyways, right? That's why I only have to focus on the price action and not my P&L, right? So you can see here, I mean, that was just a massive move, absolutely beautiful. And let's see what happens next. That thing's still going up. All right, let me pause it. Right, so you can see that was a successful play. Let's get out of those. Let's get rid of this. Let's see where we are now. So you can see we're starting to form a top, and this is where we near the play I actually took. Oh, goodness. Okay, so obviously I can't, obviously I couldn't do a fake buy right here just because it moved too fast. But this is another example, right? Isaac, what do we do here? So check this out. So you can see here how we are holding this level. Kind of the same situation here where we had a trend line, bottom reversal. In this situation, we have a top reversal, right? And one thing you have to understand is that what goes up like this must come down, right? We didn't have any retests. We didn't have any consolidation periods. We just had a crazy run. And then at some point, you just knew we were going to come back down. So once we started forming a top, what can you do? Well, Same situation. We start scaling in. Let's say I want 2 contracts. Let me get 2 contracts right here, right? 2, 3 contracts, cool. Right? We retest, we come back up. As long as we don't break this level, I'm in the play, right? Just to give you a little bit more perspective about the risk to reward on this. I mean, it's absolutely beautiful, right? And I have my levels here. Right, obviously, you know, we get a starter position here just like we did down here. What you want to do is, cool, do I add as I go down, or do I add once we break this support level? Because remember here, this was a support level or resistance level before. So who's to say we don't bounce right here? So to protect myself, I'm not going to add more here. I'll add more when we break. So we add here, and then we add more as we break, and then we just let the play you know, run to our PT of 13,167. Boom, and we're good, right? We're good. So with that, you know, you are eliminating a lot of risk by scaling in because of your position size and your you know, when you add to your position, you're averaging up. You're not adding to a losing position, but you're adding to a winning position. And realize when we add to our winning position, let me delete this really quick. When we added to our winning position, I forgot where I had I think it was somewhere like right here. Yep. When we added to our winning position, it wasn't like we were adding way down here, right? We're adding, you know, we added here. Then we added here. We sold here, right? So we're adding at reasonable places, because last thing, I'm not going to add, you know, when we're super close to the price target, because all I'm doing is averaging up at that point. That's not a good add. But I'm adding when there's still a good amount of room left between where I'm adding and then where my final price target is. That way, the profits are still going to be really, really, really good, right? Even down here. Right? I added here. Right? We added here. And then we didn't, then my final price target wasn't until technically, based off the example that I gave, right here. That's still a lot of room, right? That's a lot of upside right there. So that's a really good a good way to, you know, keep those losers small, because, you know, I'm adding to winning positions. And even if I do get a bad entry and I do take that loss on it, my position size when I first got into the play was very small. It was just a starter position. So I'm not risking a lot off bat, right? And you want to know how to keep those winners big? Look, same idea, except let's say we had 6 contracts, right? And we're moving up, right? We add here, we added here, and then we're moving up. As we near our price target, we're just taking a few contracts off the table. So you're wondering, how do you catch a full move? One thing you should always never expect to catch a full move. There's only a couple times where I actually caught the full move, like everything that the trade had to give, like from beginning to end. Like that's more of a rarity. But what I do, I have, you know, I use this example all the time. The market's like an ocean. You're the surfer. You got to pick your spots. You got to pick your waves. Once you ride the wave, you get off. If there's another big wave behind it that you could have caught, then, you know, it is what it is. There's another opportunity around the door. As long as you trade your plan, then it was a great trade. Any adjustments you need to make to your plan the next time, you just, you know, mark it down in your trading journal and then make those adjustments next time. But if you trade your plan, you're good. So I add here, right? So I have, you know, a couple spots where I added early in the position. And then as I move up towards my price target, right, and I get closer to my price target, let's say I go, you know, we hit our price target here. What I'll do is let's say I sell 4 out of the 6 contracts, right? Cool, I'm taking profit off the table. What I'm going to do next is just let those other 2 run, right? And I'll have a stop loss for them, right? So let's say, you know, just as an example, let's say, okay, cool. This is where I took off my 4 contracts, right? Where this arrow is. My stop loss for the other 2 are going to be under this level, But other than that, I'm just going to let it ride to this other PT I have that I don't really know if it'll hit, but just in case it does, I have 2 contracts that could take advantage of that move, right? That's what those that's how you can maximize your trades even more, right? That's called scaling out of a position. So if you ever want to stay in, let's say hit your price target, right? Take some money off the table and then leave a couple contracts, or leave, depending on how many contracts you use. Like I said, if you have 10 contracts, let's say you take 7 off the table or 8 off the table, let 2 run, and then you can kind of squeeze more out of that trade, than you would if you just got out completely. But for me, if I trade my plan, I have no problem just getting out the trade. That's just me. Maybe that's something that I could work on personally, maybe scaling out of trades a little bit more. But for me, I found that sticking to my original plan keeps my discipline in very solid shape. That way, I don't leave things up to how I feel in the moment, right? I have a plan, I stick to it, and then I move on to the next trade. And that's just how I like to operate. But hopefully this video helped you guys out. This is literally what I do. Like this how I get into trades. This is how I get out of trades. Either, like I said, I like to just take profit. If you want to scale out, that's definitely a great option to try to maximize trades. But because my positions I scale into my positions, even if I have bad entries, and I need to get out of trade, my losses are always small. I always say that it doesn't matter how often or what your win rate is. It doesn't, because if I lose 9 trades and I lost $100 on those 9 trades, but then on the 10th trade I made $5,000, I'm a profitable trader by a huge margin, right? So just keep that in mind. If you have any questions, please leave them down in the comment section below. If you like this video, do me a favor, like and subscribe, leave a comment. Do what you got to do. You know how it goes. And I hope you guys have a great day. I'll see you guys in the next video.